There's an overwhelming amount of financial advice in the news and on social media. Who do you listen to? Are they looking out for what's best for you? How do you tune out the noise? In this podcast, trusted advisors Emily Agosto, CPA, and Amanda Vaught, JD, bring their extensive education and experience to delve into all aspects of personal finance. Emily and Amanda make topics like investing, taxes, and financial planning interesting and accessible. And they provide a framework to help you think through the plethora of financial advice and news out there. Are you ready to start making the best personal financial decisions for you? Welcome to Connecting the Dollars with Propel Financial Advisors.
Hello and welcome to another episode of Connecting the Dollars. It is June of 2024, so that means we're about halfway through the year, which I cannot believe. But we wanted to do a little series on a mid-year market outlook or insights, and we are going to cover some topics that have been popular this year or that we expect to be kind of big ticket items for the year to come. So we're going to talk about Fed expectations, the economy in general, and inflation, the election coming up and how that might affect the market or how people think it will, and AI, which you cannot look anywhere without reading something about AI right now. So this episode, we are going to focus on that topic. And Amanda, please give us a little background on what we're going to discuss.
Sure. So AI, probably most people have heard, has been very popular, right? It's like the new thing. And a lot of AI, in the market, there's a lot of companies in the AI space and doing AI, but the one that gets all the headlines is NVIDIA. So NVIDIA recently became the largest company in the country. It beat out Microsoft and Apple, who also do AI, right? Mm-hmm. But the rise of NVIDIA has really been meteoric. And so I looked up the numbers. So as of June, this is as of June 20th, year to date, NVIDIA is up 164% compared to the S&P 500 is up 15.5%. And a lot of that S&P 500 gain is driven by NVIDIA and other AI stocks, sometimes called the Magnificent Seven or the Fab Four, depending, on the timeline you're looking at. And that's just year to date. If we look at NVIDIA over the past 3 years, it is at almost 603% return. That's not an annualized number. That's over 3 years. So those kind of numbers are insane. They don't happen very often. They get people excited. They get people greedy. They get a lot of FOMO and a lot of headlines about them because that's what people are talking about, and that's going to be driving clicks. What did you say, Emily?
Yes, for sure. When anything is going a little crazy in the market or there's a huge rise or a huge fall, everyone's going to be talking about it. Everyone's going to have their opinion, throw their hat in the ring. So as the average person, as the average investor, first of all, yes, this is an anomaly. Like everyone's reading about it, but also just be wary, like any financial information you are reading about, just be wary of the source, because some people, like, I can go online and say, I would not say this as an investment advisor, but the average Joe can go online and say, well, NVIDIA is going to drop tomorrow, and then it goes up, the next day it goes up like 20% or something crazy like that. But what do they have to lose or gain? It's just throwing that out there because they want to either feel good about themselves or just, have an opinion on something that's important. So that's the main thing, just to be wary of your source. Definitely talk to your financial advisor if all of this frenzy about NVIDIA is making you feel nervous or you're feeling like you're missing out on something. A lot of people are, a lot of writers are comparing this rise of NVIDIA to the dot-com bubble, which sure, there are some similarities, but it's not the same thing. Um, I won't go into all the details there because there's a lot we could say there. But, it's sort of like what's driving you? What are these feelings? Who are you reading information from? Talk to
Yeah.
us if you are feeling any of those like nervous feelings. Like this has happened before. Things go up, things go down. We're not saying it isn't an anomaly or isn't something that, should be talked about, but maybe it's not the only thing that needs to be discussed in your portfolio.
Yeah.
So, as an investment advisor, what would you tell your client if they're nervous about it or if they have any questions or fears?
Yeah. I think you made so many good points there, Emily, that I think it could be
Had
helpful
too
to,
much.
yeah, to parse some of them out a little bit, or a little bit more. But just like touching on the dot-com bubble comparisons, that's a big one. Because when we do see these big rises, it does make the average person nervous. And when they get nervous, they want to read about it. And they want to see, what are people saying? And then if people are comparing it to the dot-com bubble, that just makes it sound more extreme, and it plays into that
Yes.
fear and those feelings that people are having. So yes, this is a tech company that has had a large rise. It is like a new technology that is being adopted, like the internet and cloud versus AI right now. So there are some parallels, and then we did see, a huge increase in stock prices in the late 90s leading up to the dot-com bubble. But there are big differences which are important to point out. One of them being that Nvidia continues to have earnings reports that are just, I would say, maybe incredible. I mean, the amount of money they're making. I mean, these are real dollars, and there are real people buying their products. I think sometimes Nvidia gets a little bit, consumers don't know how to think of it because they don't actually buy Nvidia products like the other two largest companies, Apple and Microsoft. People work with Microsoft Word, or they know what Microsoft does to an extent, right? You know what Amazon is, Apple, you can buy an iPhone, right? Their consumers aren't really buying Nvidia products. So its rise, I think, feels a little bit weird to people because they don't actually see the Nvidia name at the store,
Right.
right? So I think that makes it a little bit like, I can't think of the word, like
Yeah,
kind of, right? Like
exactly. It's
hard
like
to wrap
why?
your head around, like what.
Yeah. Like
Um,
people in certain industries probably use, NVIDIA chips or they understand them better. And so they understand why this company is jumping up rather than someone in another industry might try to compare it to GameStop being like, oh, well, it's just another, like, I don't know, anomaly like in that area.
yeah, yeah. Like it's getting a lot of attention, but the attention is for a completely different reason, right? Than like a meme stock.
Yes.
Um, is there a lot of greed and speculative behavior behind both of them? Yes, but at the end of the day, Nvidia is putting up the earnings. AI is a new technology that is spreading everywhere. A lot of people think that it's, the next, it's been compared to the next industrial revolution. I mean,
Yep.
are those really optimistic viewpoints? Maybe. But there's a lot of basis in reality to them also. So it's not like, GameStop was really big when people would go to the mall. I mean, it's not like we see new malls being built, you know,
Right.
um, where you think that's going to take off. Or it's not like the dot-com bubble where a lot of companies had elevated stock prices and they weren't showing up with the earnings to back it up. And so those are speculative things, right?
Yes.
Um, and then one metric we look at, right, is the price to earnings ratio, which is one of the numbers that can be a guide to tell you if a stock is overvalued or not. Nvidia's, we looked it up, it was 74 this morning. There's the trailing price to earnings ratio and the forward price to earnings. So trailing was 74. Forward is like for what you expect the forward earnings to be. That was 53, a little over 53. At the dot-com bubble, the PE ratio is more like 150 to 200. So it's just a different scale
Yes.
of number there. So just to help put that kind of thing in perspective for people, hopefully.
Yeah.
Maybe it could become a bubble. We don't know, but we don't think it's there yet.
Yeah. Thanks for getting into that. That was too much information that I couldn't get out in my earlier
Yeah.
sentences. But okay, so that's really helpful to kind of set the scene of, obviously you can compare it to something in the past, something you've experienced. So that's why the dot-com bubble and GameStop things come up. But going back to, say I'm your client and I'm like, NVIDIA is doing great. We should buy all NVIDIA only. Like, what would you say to that? Because it makes sense. Like, this is making a lot of money. So I should own it, right?
Yeah, right. Who doesn't want to make money in their stock portfolio? It's a very normal request, right? But one thing, when stocks have huge rises like this, I mean, could it keep going up? Yes, right. Could it go down a lot? Yes, right. Both are possible. That's the thing about the stock market and taking risks, right? We don't know the future. And so, if you don't own NVIDIA now, should you buy it now is a different question than if you have it in your portfolio and should I sell it, right? And so when stocks go up like this a lot and you do have it in your portfolio, it could be a good time to take a look and say, does this make sense in my portfolio allocation? Because it has gone up so much, it could be a real outsized position. And one thing in portfolio construction you want to consider is proper diversification. And so if you do have a large position in one stock, it becomes riskier and riskier. Because if it does go down, then your portfolio is going down with it. And that doesn't feel good either, right?
Yeah. Yeah, it's very tricky. And there's,
Yeah.
so many things to consider if you have, tax planning comes to mind because that's what I'm always thinking about. If you have a huge capital gain this year, then you got to think about that in comparison to all your other, pieces of your financial picture. So
Yeah.
it's something obviously we're keeping an eye on, we're looking at, we're reading about at all times, but we're also coming at it from the perspective of a long-term portfolio, or in terms of your personal goals, in terms of your risk profile. It's likely you already own some NVIDIA, like either indirectly in a mutual fund or an ETF. I think that FOMO, like if people are saying like, oh, I don't own it outright, maybe that can be eased a little bit that way. But yeah, I think we hit a lot of the points. Was there anything else you wanted to?
Yeah, I think it does. Related to this is the market, the broader market, either the S&P 500 or the broader US stock market. A lot of the returns have been driven by Nvidia and other large tech stocks this year. And a lot of the other companies are really trailing. Not everything, right? But small and mid caps have been struggling this year. Other companies in the S&P 500 have been struggling. So the returns you're seeing in the S&P 500 or the broader index are largely driven by these companies. So even if you don't own NVIDIA directly, you do own it. And if you do own the index, right, you just look under the hood, as we say, and see what's in there and what's driving it.
Right.
And so while we're saying that the earnings reports have been good for these companies so far, that's good, but it is leading to a market concentration. And as we said, like if you have individual Nvidia stock becoming an outsized weight in your portfolio, it's also becoming an outsized weight in the broader indexes as well. And as that concentration increases, it does become riskier. And I think a lot of people have an increased risk in their portfolios that they might not necessarily appreciate or realize is there, which can happen, right? When you're just like, oh, I don't want to miss out on Nvidia. The S&P is going up. This is great. And it is great. But I think just being aware that that risk is there and it's growing can prepare you for if the market does go down. But these are things we can't time. And I think when these happen, people start thinking about market timing. It's one of those myopic, short-sighted view things. Like you said, stick to the long term. Don't get distracted. These kind of things bring up a lot of feelings. If you're having a lot of feelings, that's normal. That's where a financial advisor can come in. You could say, I'm feeling this about this, and we can walk you through it and take a step back. So don't be shy to reach out and talk about it with us.
We've seen things like this happen before, and there will be another, stock that everyone's chasing at some point, or, another popular thing in the future. So like I said earlier, like we've said, this is interesting and kind of a big deal as far as, because it has affected the S&P 500 so much and the broader US market. So it is interesting, but we're not ignoring it if your whole portfolio doesn't automatically change to Nvidia, or
we're looking out for, if we're not putting you 100% in Nvidia, we're looking out for you doing that.
Right.
Trying to save people from themselves. That's part of our job.
Yes, it's hard to put that into words, but yes, that's well said. All right.
I do just want to add, we are going to do a series and cover some other big topics in the market. And if we have been getting a lot of questions from clients about NVIDIA and AI and other tech stocks. So if you did have a question we didn't answer in this episode, we can do it as a listener question in some of our follow-up episodes as well. So please reach out to those.
We would love that. All right, so let's wrap up today's talk on AI and NVIDIA, and we will talk to you next time about the Fed, the economy, inflation, all that good stuff. So we will see you next time.
Yes.
Oh yeah, good times.
Okay, bye, Emily.
Bye.
That will do it for this episode of Connecting the Dollars. Nothing discussed in this episode should be considered legal, financial, or tax advice. If you like what you heard, please subscribe for more at Apple Podcasts or wherever you get your content. When you do, please give us a rating and a review. To see the links we mentioned in our show, along with other great Propel Financial Advisors content, go to connectingthedollars.com. You can find our past episodes there and subscribe to our newsletter. And if you're still here because you have a general question, you can email us directly at info@connectingthedollars.com. Or, if you're interested in working with us, click the Schedule a Consultation button on our website. Thank you for listening.